All right. So, hello. It's me again. I had a couple people complaining that my film wasn't very good. That I was, one video I had was just taking kind of pictures of my feet, and the other one was just a sort of a stand still shot of the swimming pool. So I guess this way you can see me talk. I had a couple people ask me to well, I'm kind of pessimistic about a lot of things going on in the world at the moment, especially the economy, and I express this to the people around me, and so a couple people have suggested maybe I should make a video and explain what it is that I think, why I think it. Am I just crazy? So I guess I'll get into that and explain it as well as maybe I can. I've always been interested in economics. I loved the economics classes that I had in school. I might have actually majored in that particular subject if I thought there was much you could do with that sort of a major, and I didn't. But I did enjoy the classes, and I've spent a fair amount of time kind of studying other resources outside of school, and let's see, maybe, hopefully you can see me, and listening to the opinions of different people, and mostly just thinking about things, and so my perspective is this. And the thing is, before I get into it, I kind of want to say, if you disagree with me, please do let me know what points you disagree on. I think that it's important to have a dialogue. There's certainly viewpoints I've had in the past on a lot of issues which I now would probably take the other side, because maybe there was an argument I hadn't heard, something that didn't make sense to me, or maybe something that I just hadn't thought about something. Sometimes things come down to a value judgment, which is valued more highly, A or B, and in those situations I think it's largely a matter of opinion. But I think a lot of topics can come down to logic, and it can become clear that one viewpoint really does make more sense than another. So I invite anyone who disagrees with me to state their position. Hopefully it would never degrade into an argument. I seek to understand other people, and I hope that they understand me. So with all that said, I think we're in some trouble. The situation today is the country has, I don't know it's 16 point something trillion dollars in debt, which is, I believe, close to 100% of our gross domestic product. And every year, it seems, we have about $1 trillion deficit. So we're spending that much more than the government. When I say we, I mean the U.S. government is spending that much more than it's collecting in tax revenue. So these deficits are financed. Well, it used to be they were financed largely by individuals. Even American citizens would own savings bonds. Foreign citizens would own them pension funds. investment mutual funds, foreign central banks. A lot of different groups of people owned these things. But now we've got a situation, all of those groups still do own US debt to some extent, but most of the new debt we finance, so that 16 trillion, a lot of that is owned by all those kind of parties, but a lot of it, and a lot of the new debt that we accrue every year is owned by the Federal Reserve. What the Federal Reserve is, my understanding, is a so-called private institution that essentially they control the money supply. They can create dollars and they can destroy dollars, and they can use those dollars to buy assets, and they can, and then they can sell the assets that they own and pull the money back in theoretically and destroy the money. So that's kind of my understanding of what the Federal Reserve is, what it does, and I think the idea is that by adjusting the money supply, they can kind of steady the bumps of the natural kind of business cycle. Whether you agree with that or not is a whole other issue, but as it stands today, the Federal Reserve owns a large amount of our debt, and for the past several years they've so they don't actually let's see if I remember how it goes. They don't, I believe, actually buy the debt directly from the Treasury. I believe the Treasury sells the debt to banks, and the Federal Reserve loans money to the banks to buy. Actually, you know, they do directly own bonds, because that's what open market operations is, I believe. It's where they buy bonds or sell bonds. So I guess, you know, maybe I don't know the exact mechanism, but I do know that ultimately they create money these days, and that money eventually buys bonds. Whether it's through the banks or whether they buy them directly, I don't actually know. I guess that's something I need to study more. But I do know that their goal in all of this is to keep interest rates very, very low. Their idea, I think, is they want to stimulate the economy, so they think if interest rates are low, then you know, businesses can borrow at cheap rates to invest in new business. Housing markets help, people will buy houses. But wow, I'm tired today. So they're keeping these interest rates low, but the problem is, if the Federal Reserve wasn't buying debt, then interest rates would be substantially higher. I don't know what percent they would be, but they'd definitely be a lot higher. When the more demand you have for something, the more that increases the price. And when you talk about bond yields, a higher price and a lower yield correspond to one another, because if I own a bond that pays 5%, if the new debt that is being issued was to pay 1%, now that bond that pays 5% is worth more. So the yield went down, the price went up. So when you have this huge buyer, the Federal Reserve, buying bonds, they're driving the yields really, really low, much lower than the market on its own would dictate. And so what that means is that prices are artificially high. The other thing they do with what they're doing is they're actually creating inflation, because they're essentially creating new money. They're using it to buy bonds, money that wasn't there at all. Now, the net amount of stuff in the world isn't necessarily changing. I mean, it is changing slowly, but that's kind of independent to how much money they're printing, or, you know, otherwise creating electronically, I think, these days. So the debt, wow, I shouldn't do this after I run. I'm just completely out of it. I slept about 6 hours last night, about 4 hours the night before. I think I'll probably end up deleting this one. So, where was I? The debt. So they're creating inflation in addition to lowering or raising the price of bonds. So all this inflation, eventually, it kind of seems like it should be forcing prices up. Now, the official consumer price index, which they use to measure inflation, hasn't yet moved up dramatically. There are certainly questions I've heard people raise about the validity of that measure. Apparently, if we measured inflation the way we used to do it in the 1970s, when inflation ran amok, inflation would actually be significantly higher today. But whatever the case, when they create the money, they are creating inflation. Now, maybe the other things are happening which are a downward pressure on prices, but this is definitely creating an upward pressure on prices. So maybe the economy's kind of contracted in real terms, and prices have been, demand's gone down due to that, but demand's gone up because of the inflation. And there is some inflation even in the CPI, and those things are kind of pushing against each other. So, but eventually, the problem is the more they do this, the longer they do this, the more inflation it's going to create, because they're constantly creating new money, and there's no corresponding increase in goods and services to counterbalance that. So the longer this goes on, the more inflation there is. And the problem with this is, if I own a bond, if I have a 30-year bond, I'm getting a fixed interest rate for 30 years. If inflation gets higher than that interest rate, then in real terms I'm actually losing money. I'm guaranteed to lose money. If a bond is yielding me 5% and inflation was to hit 6%, then I'm losing out on the deal. I'd be better to just buy something, anything really, and just have that same object in the future, assuming that object's real value didn't change, than I would be in that investment. So why invest in something you're guaranteed to lose? So what happens is, if this happens, when this happens, I believe, the other creditors, so a lot of people do own debt, like I said, other than the Federal Reserve. But if inflation gets to a point where their yields start to be outperformed by inflation, people are going to want to sell that debt. They're not going to want to hold on to that. You'd be insane to want to hold a treasury bond. I mean, they're only yielding like very, very low, depending on the length, the maturity. You'd be insane to want to hold that to maturity if inflation overtakes it. So what's going to happen is, the longer this goes on, the more inflation the Fed creates, the more people are going to want to sell bonds. And the more people want to sell bonds, the more bonds the Federal Reserve has to buy to keep interest rates low. So the question is, well, why don't they just let interest rates rise? And the problem is, if they let interest rates rise, everything, this whole housing recovery, so-called recovery, this so-called recovery from the recession of 2008, all of that would kind of go away. If interest rates went up, the housing market, for one, would collapse. But other things would collapse too. Banks, as far as I know, banks hold a ton of, these treasuries. If they've got loans from the, earlier I was talking about, now I think I do remember, the Federal Reserve, they have a couple different ways they do this. They do have open market operations where I believe they do essentially just buy and sell bonds, but then they also have the reserve, they set interest rate. I don't remember exactly what it's called, but essentially that interest rate, a bank can go to the Federal Reserve and they can borrow money at that interest rate. Right now it happens to be 0%. So a bank, what does a bank do? They borrow money from the Federal Reserve at 0%, and they buy a treasury bond that pays 3% or whatever it pays, and they kind of just make that spread. So even though the Fed maybe doesn't buy them directly, that's kind of how the cycle's going. At least that's my understanding, again, and I could be wrong. So more and more people keep dumping U.S. debt. Federal Reserve has to then buy more and more to keep interest rates low. Now, what should they do? They should let interest rates rise. They should stop buying debt. They should unload their balance sheet, and interest rates will go through the roof. They'll be, they had to be 20% in the, what was it, around the late 70s or whenever it was with Volcker, and they had to rein in the inflation they had created. They had to raise interest rates very, very high. They'd probably have to be even higher today. Banks would fail. All these banks holding all these treasuries, well, again, interest rates rise, bond prices plummet. They hold a lot of bonds. They also hold a lot of mortgages, mortgages. So all the price of all those, all these I guess, what do you say, debt instruments would collapse in value. The banks would fail. So all the banks would fail. Boo-hoo. Stock market, probably would crash off that. I mean, a lot of, the S&P 500 is made up of financial institutions. So, we'd have a stock market collapse. We'd have a bond market collapse, a housing market collapse. And the Federal Reserve doesn't want that. The politicians especially don't want that. But that's what we need. Because if we don't do it, I believe we face a much more dire circumstance. So what happens? So all these guys, they flee the debt. Let's say the Federal Reserve, they keep buying treasuries to keep interest rates low. No matter what, they're going to keep interest rates 0%. They're going to keep yields down. They're just going to buy. They don't care if they have to buy every single treasury there is. Well, like I said, when they do this, they're creating inflation. And if they become the only buyer of U.S. debt, then the inflation they're going to create is just going to go through the roof. If they were buying every bit of debt we issue, $1 trillion a year, was just bought for with essentially printed money, that would just, inflation would go off the charts. And then it would be kind of, it couldn't be reined in at that point, because if inflation is that high, all these government expenditures, everything the government does, this massive, massive government we have, all these expenditures would get higher. It would become more expensive to buy weapons for the military. It would become more expensive to build infrastructure. Social Security recipients that start demanding higher checks, which, the government, they'd want to pander, so they'd probably raise those benefits. And it would just be an endless cycle where where the Federal Reserve would just have to keep printing more and more money to buy this ever-increasing burden of debt, and inflation would just go through the roof. Not to mention all these foreign bondholders, these foreign central banks, these foreign individuals who own U.S. debt. When they sold their debt, well, what do they get? They get dollars. And what do they want to do with all those dollars? They want to buy things that people are selling for dollars, which again has this huge influx of dollars going into the rest of the economy, and the price of everything goes through the roof. And so, anything you can buy with dollars, you're going to be competing with all these foreigners who are cashing in these bonds to, and it seems to me like, that's the road we're heading down. So yeah, option A isn't pretty, depression, probably very, very high unemployment. It would be just a massive, massive restructuring, because there's so many things. Essentially, I think what a recession is the economy trying to realign its resources more efficiently. And I think right now our resources are very, very misaligned. Just in the big picture, one thing I learned in all those economics classes I took was ignore the money. Just ignore the money. Just think about the goods and services, and think about that. And it helps to understand a lot of things about economics more. And if I think about that in today's economy, what's really happening? People are manufacturing goods in China and other places. They're spending all day working long hours in sweatshops, producing all the stuff that we use. They produce all this stuff, they put it together, assemble it, and then they ship it to America. I remember in my supply chain management class learning about the port of Long Beach. It's one of the largest ports in the world, and these apparently shipping containers will come in all day, unload stuff at Long Beach to be distributed around the United States, and they'll leave empty because we just aren't producing anything. We're selling them our debt, essentially a promise to pay them dollars in the future. And they're giving us stuff. So there's something wrong with that picture. Why should they be working all day so that I can, shop at Walmart and buy a bunch of crap, while we all work in the service sector? We all provide services to one another. I work so that people can do their taxes right, so that people can comply with the federal laws regarding taxation. But in real terms, I'm not producing a product. I'm not doing anything that. Now, yeah, I'm helping the economy to the extent that, given the situation there is, people have to file their taxes. It's less burdensome for a company to hire me or my company than it is to just not comply or try to do it internally. So I am helping, given the situation there is, but in real absolute terms, I mean, there shouldn't be this many people wasting away doing services that really shouldn't be necessary. All these people are graduating from college, and they're working as servers at restaurants and bars. They're taxi drivers. They're maybe they're working as secretaries. They're doing all these jobs which you don't need 4 years of college to do that. You don't even need a high school degree to do most of that stuff. And this is what we've produced. Our government's created a ton of bad incentives, and it's really screwed our economy up. Right now we don't see it because foreigners are willing to buy our debt to kind of give us the illusion that we have this great standard of living. But our standard of living is contingent upon their hard work. And it's not going to stay this way forever. Eventually we're going to have to pay for what we use. We probably won't have to pay for all the stuff we've already consumed because we probably can't. We're going to default on that debt. Either if they let interest rates rise, the U.S. government defaults. That was the other thing I forgot to mention. Housing market collapse, bond market collapse, stock market collapse, and probably, well, definitely a default in the federal government default, along with all the municipalities and things like that would probably default also. So states would default. A lot of people would default. So that's the rosy outcome. Or the other way, yeah, maybe we technically pay off that 16 trillion of debt, but we just do it with money that the Federal Reserve printed. So the money's not going to be worth anything. So yeah, they technically are going to get paid back dollars, but it's going to be dollars that are, they're not really worth anything. So we're not probably going to have to pay for all that stuff. We'll have to pay for a little bit. When the collapse happens, the foreigners, like I said, they're going to sell off their debt, and they're probably going to sell it off before the people in America do, before the pension funds, before the the kind of mutual funds in America that own all the debt. The foreigners will probably sell it first, because they are going to notice the U.S. currency is losing value rapidly. They'll notice the inflation before we will, because the currency will depreciate against their currencies. They'll notice that, so they'll probably unload bonds first. So a lot of items they will probably manage to scoop up with the dollars they have before those dollars become worthless. But the vast majority of what we've borrowed will never pay back. So I guess there's the good news. Bad news is, going forward, no one's going to lend us a dime. There will not be a product shipped from any country and sold into America, because no one's going to want dollars. We're essentially going to have to live off what we produce. And even that, we're going to have to be able to outbid the foreign competitors who are bidding on the items we produce. So we may actually have to live below our means, and our means is really, really low compared to what our standard of living is today. Our means are very, very low. We're not as bad off probably means wise as some countries. We're not, it's not like this is sub-Saharan Africa. We have, infrastructure. We do have plants that can manufacture things. We have a pretty good grid of utilities and things like that set up, but we also don't have the infrastructure necessarily that would support the kind of lifestyles we're going to have to live, which they would have in sub-Saharan Africa, because they've been living like that forever. So it's that's why I'm pessimistic. This has been a really long video. It probably doesn't make a lot of sense because I am really tired. I'm going to turn it off now. Feel free to critique it, and maybe I'll try to put a shorter version together and delete this one. Good night.